traders. So this is a weekly outlook. Okay, we can see that from this key zone, gold was actually bearish going all the way to this level, and then we kind of had a curve here that has pushed price from bearish to bullish. Okay, so this is my trading range. This is my trading range. Okay, so as a day trader, I want to be looking for setups from within this leg. Okay, so our last break of structure to the downside was actually here. This was our last break of structure to the downside. Okay, and this level here, which is the level that caused this break of structure. Okay, this level here is what gave us a change of character. Okay, so let's go to our lower time frame. Okay, so we're doing a top-down analysis here. We can already see, or we already saw from a higher time frame, that this was our last break of structure to the downside. Okay, and this break of structure was actually a valid break of structure because we took out what? We took out inducement. Okay, so this was a valid break of structure. Okay, so internally something happened. You understand? Like internally we had a change of character. This now is for internal. What happened internally? Okay, so let's put this on the side. Here we took out liquidity. Okay, and here we had a change of character, and this was the order block that was responsible for that change of character. So that was the order block that was responsible for that change of character. Okay, so I'm not going to be analyzing. Okay, let me analyze this last break of structure, which was a correctional move to the downside. Okay, so, and internally we also had another change of character, but also bear in mind this was all happening internally. Okay, so the order block that was responsible was actually this order block. Okay, that was the order block that was responsible. So fast forward, let me just go here. Here we have a break of structure to the upside. Mind you, this is Xauusd. Okay, and this is the order block that is responsible for this break of structure. Okay, but I'm not going to be expecting or waiting for price from this level, although this is a very significant area. But look at where price is, and look at where I'm waiting for price to come and react from. So you see where price is at currently. Okay, so I want to see what is happening a bit higher. We have a break of structure here, and what I usually do is that straight after a break of structure, I would label the order block that was responsible for that break of structure. Okay, we have another break of structure here. Okay, and then this is the order block that is responsible for that breakup structure. Okay, so okay, so it's this level here. It's actually the last candle before the push up. So I'm just going to take this whole level as a demand level. Okay, I'll consider this whole level. And then we have another breakup structure here. Okay, this is a breakup structure to the upside. So we have this level, and this could be the liquidity price would have to clear before price can actually come and tap into this level. Okay, so let's see if there's any other significant area. Okay, there's also a breakup structure here. There's also a breakup structure here. Yeah, there is a breakup structure at that level. Okay, so now let's do this. Okay, so we have this being our order block, and then we also have this breakup structure here. And now this breakup structure is a valid breakup structure because it took out inducement. Okay, so this is my strong low on the lower time frame, but from the 2-hour time frame or 4-hour time frame, this level is significant. But my first concern would be this level. So here we had a breakup structure with a full body closure, and then we have an order block here. We have an order block here that price could want to come and tap into, but now we don't have like a fair value gap here. So let me see on 15 minutes if we do have that fair value gap. And we actually don't. The fair value gap is on this candle here. You see? So my entry would be from this level, and then this level would be my stop loss. Okay, and we also have this liquidity. Okay, we have this liquidity. We also have another breakup structure here. We have this breakup structure here. So we have this breakup structure, but now this breakup structure hasn't given us a clear order block, or let me say an order block that has displacement. So I won't even consider this level. We also have this level here, you see, which is also liquidity. Okay, so the market could come and tap into this order block. You see, the market could come and tap into that order block because the order block has a fair value gap here. Even though it's tiny, but it's still a valid fair value gap. You see, and then this being our liquidity, and then we could have a long position from this level going all the way to this level. Okay, and then our trade could look something like this. So these are just levels where I think the market would react from. And then we also have this level, and this level does have an order block that is actually unmitigated. Okay, so fair value gap. Okay, and then here I'd want my stop loss to be slightly below this level, slightly below. Okay, slightly below that level. So this is what I actually have on gold. So I'm going to be back maybe on Tuesday or Wednesday for us to go through what the market has done within these levels. This is actually a good level though, because it has liquidity, fair value gap, a valid this is a valid break of structure because inducement was taken out. So guys, how I consider my break of structure to be like a valid break of structure is when it takes that inducement. Okay, so if no inducement is taken out, yes, it's a break of structure because obviously the market would have closed above your previous higher high in a bullish market or below your previous lower low, but without any trap, I don't really consider that level a strong break of structure. Okay, and don't get me wrong, I'm not saying there's a strong and weak break of structure, but I'm saying that I would consider a valid break of structure after inducement has been taken. Okay, so for example, and like here, if I were to use the H1, then this level here would be my order block, and then this level would be my fair value gap. Okay, and I think I'm just going to leave it on H1. However, my stop loss now would be wider, you see, but I think this is a more valid area. This is a more valid area. Okay, so that is just the lookout, and then the entry price would be where I'm putting this. And also guys, this is not financial advice, so please do your own research, or you can also do your own analysis. The strategy I'm using is smart money concept, so, and then my stop loss would be slightly below this previous week low. Okay, so, and then likewise here. But now this level here on H1, it's not, it doesn't have a fair value gap. The fair value gap only starts being visible, I think, on, oh okay, it is visible also on M15, on M30. So from M30 and so we have this level, which could be our entry, which is 4538.0, and then our stop loss slightly below the level. Guys, this could hit stop loss, or it could go straight to TP. I have no idea, but I am going to set a pending order for this and for this. So if this hits stop loss, then I'd obviously take this trade. However, when I have a trade like this, what I usually do is that I would take half of my risk to reward ratio. If I usually risk 1% on my trade, I won't risk 1% here and then another 1% here. Instead, I will risk 0.05% here, and 0.05 here, or 0.5 here. You understand? Which means I'm risking 0.5% and 0.5%, which both trades will make 1%. Okay, so if I hit a stop loss here, which means if I'm risking $100 on my trade, I'll risk $50 here and then $50 here. So if this goes to TP, then I would obviously recover the loss that I made on the first one. And if this goes straight into TP, then that means I would make half the money I usually make if I risk 1% on my trade. That's how I risk per percentage. You understand? I don't tell myself I want to risk X amount of money. No, whatever my account is, 1% of that account. Okay, and if I'm willing to lose, because in Forex you can't be trading with money that you're not willing to lose, because there's no guarantee that that money is going to come back. You understand? You could have a losing streak. Now, because of that losing streak, we're not expecting you to start having phobias now of trading because you had one bad week or something. You understand? So yeah, but all my confluences are intact. So I also analyzed what was it, Gbpusd. Yeah, I did analyze the Gbpusd. Okay, and this is what happened on Gbpusd. Okay, so in Gbpusd, guys, we have a bullish trend to the upside. Okay, and us having this bullish trend to the upside, my trade didn't actually tap me in, so yeah, I didn't get tapped in, guys. As you see, this trade is running into profits, but I think the trade actually tapped properly into the a fair value gap and then started pushing up. So I use order blocks, but my order blocks go hand in hand with a fair value gap, but I don't enter from a fair value gap. I don't know if I make sense, but that's just what it is. Okay, so but for some reason I'm still gonna keep this level here. A reason being, okay, I don't have a reason, guys, but I also have another level below. You see, I also have this level below, which price could potentially come to, but like I said, this would have been a safer entry for me. You understand? So here we just have break of structures to the upside, break of structures to the upside. My only concern was that these break of structures are not taking out any inducement from the right hand side. Like from this leg, there's no inducement taken out, and then this break of structure hadn't taken out any inducement from here. Rather, it created equal lows. So I saw these equal lows and I was like, okay, these are relatively equal lows. And with that in mind, I said, okay, let me use an order block that is below that level to push price to the previous turning point. Okay, and then I didn't get tapped in, guys, for some reason. So it is what it is. The market does this all the time, so it's not like it's something that only happened to me. No, it happens to everyone, guys. Okay, so let's analyze DXY. Okay, So what I usually do, guys, is that I would first see where is the market likely to go to. Okay, first of all, we know that the market moves from a PD ray to a PD ray. Okay, if a market moves from a PD ray to a PD ray, it means that market moves from premium to discount, and the market does one of two things. The market is either seeking liquidity or offering fair price. Okay, so if we say market is offering fair price, we are saying that the market moves from a fair value gap to liquidity, from liquidity to fair value gap. That's what the market does. Okay, so like in this case, we have this weekly fair value gap, and this weekly fair value gap was actually mitigated, even though it wasn't fully mitigated, but it was mitigated. Okay, so that being said, I'm also going to look for any other point of interest that I might see here. So we took out liquidity here. I want to see something. Yeah, we took out liquidity here, and then we also took out liquidity here. So what is the range I want to work in? I want to work in this range, and I want to work in this range. Okay, hold on. Okay, sorry guys. Okay, so we have this market pretty bullish, actually, if you ask me. Like, this market is pretty bullish, you know. We have like this break of structure to the upside. This is daily time frame, guys, and then we also have this break of structure to the upside. You get it? So until the market takes out this low, we are still bullish. This could be a deeper retracement, but it hasn't actually turned bearish yet, because this is the low that is protected. Why am I saying that? Because it took out these lows, you know. So these lows would have acted as inducement. So these lows were taken out. Okay, so that being said, now let's go to 4 hours. And then on 4 hours, now I wanna, okay, let's go back to daily. Let's go back to daily. Where's the market likely? Okay, we have a fair value gap here. This fair value gap was mitigated. Like, this fair value gap was mitigated. So, you see, this fair value gap was mitigated. And then we also have this fair value gap that also has an order block. Here's the order block here. You understand? So, okay, so here, this level, the market is making really hefty moves to the downside. Okay, so let's try and analyze the side. We have a break of structure. Okay, we have a break of structure to this level. Let me see. Okay, guys, I won't consider this level as a break of structure because I want to see a full body closure to the downside. So we have a break of structure there, and roughly we also have a break of structure here, you see, and the order block that is responsible for that break of structure is this. Let me see, this is the last order block, but let me use this order block, okay, because there's also a fair value gap here, and there's also a bigger fair value gap here. But let's go to a smaller time frame and see. So on a smaller time frame, this level comes to here, okay, and then here, this is actually the order block that is responsible for this break of structure, okay. Okay, and it's a good thing that the market is actually creating liquidity, because then we know when the market creates liquidity, it tends to move drastically after the liquidity has been created, okay. So we have this order block, and then we're creating a bunch of liquidity here, and also this order block has this fair value gap, okay, you see, and then we also have like this liquidity piling up, okay. So all my confluences are intact, and now with this, I would like to put my stop loss above this level. Reason being is because we have relatively equal lows, and then probably target A1 is 3. Risk to reward ratio, you see, like here, okay, slightly below, and then like target A1 is to 3, something like this, okay. So guys, this is how I do my analysis on a weekly basis. Thank you for tuning into my channel, guys. I'm not much of an outspoken person, however, I hope I do get the confidence to be able to speak speak out loud on my channel. You know, I'm much of a loner, so yeah, thank you for tuning in, guys.